Passive Pockets is presented by Equity Trust. Welcome back to Passive Pockets, the passive real estate investing show presented by Equity Trust. I'm Jim Pfeiffer here with Paul Shannon, and today we're diving into one of the most game-changing tools emerging in the investing world, AI.
We're joined by Leyla Kunimoto, a limited partner with a tech-savvy edge, who's been incorporating AI into her real estate due diligence. From ChatGPT to advanced underwriting models, we'll unpack exactly how she uses AI to evaluate deals, identify risks, and make faster, smarter decisions as a limited partner.
Whether you're AI curious or already experimenting, this episode is packed with practical takeaways for any passive investor. Let's get to it. Leyla, thanks so much for coming on the show.
Thank you for having me. It's a pleasure.
Can you tell us a little bit about your background and what type of investments you're involved in as a limited partner?
Yes, so my background is in finance. I have a degree in finance. I like numbers a lot. And for the past 5 years, I've been investing in private markets. Most of the deals I look at are commercial real estate, private credit, and some private equity. I invest across all asset classes. I look at a lot of things. I do this full time. I look at probably close to 20, 30 deals a week on an average week. And some of those deals I do deep dives on. And I write about all of my experience in my newsletter, which is accredited insight.com. And that newsletter is mostly about my experience and what we see in the market.
Awesome. So the focus of today's conversation is going to be AI, right? And many of us haven't started with AI, or like myself, I once tried to plan a driving trip on AI and it ended up in a disaster. We had to drive 12 hours one day and 2 hours the next. So I haven't dug back into it because I kind of got burned. So can we start with what is AI? What is a large language model? And what isn't it for the purpose of this conversation?
The way I use AI, and I will be referring to it as AI, I use large language models to help me evaluate deals and offering memorandums, and I am starting to test a lot of large language models to help me evaluate actually the legal documents. But for the purposes of today's conversation, AI is just any large language model, and there are plenty of them. Most of them have free plans. The ones I use heavily are ChatGPT, Claude, and the third one, and my favorite for this purpose, is Notebook LM. Notebook LM is one of the newer models. I've been using it very heavily for the last few months, and that one has its advantages. So a large language model can take information that it finds on the web, synthesize it, and very quickly give you the answer. The upside is unlimited, right? We're all excited about the possibilities. The downside that I have been running into is this. Oftentimes, ChatGPT, you'll ask a question, it gives you a very confident answer, and that answer is wrong. Sometimes I just know that answer is wrong, or sometimes it's as simple as a mathematical question. It's, here are the cash flows, calculate the IRR, and it gives something that's completely not within the ballpark, where it's visible to a naked eye, it's not in the ballpark. So that's the downside of some of those models, and ChatGPT is prone to this a little bit more perhaps than some other models. As we get deeper into this conversation, I'll talk about why Notebook LM is far superior for the purposes of what we're doing today.
I definitely am looking forward to getting into that. And I've been looking forward to speaking with you, Leyla, because this is a topic that, frankly, I'm a little skeptical. I'm a late adopter. And I can see the benefits and the value and already realize that I'm getting behind. So I'm trying to get that edge and try to catch back up, but I just don't know what I don't know. So before we get into the weeds a little bit more, as I'm reluctant to change, most people are, there's got to be sort of a pain point, right? As to why you make a change in your process. So what was that change point for you where you started exploring AI, and what specific tools you could use, and how has it impacted your investing strategy moving forward?
So my pain point, and again, this is because I have a background in finance. I'm a numbers person. Let's take an example. Sunbelt multifamily deal, straight up equity deal with, let's say one tranche of equity. Straightforward, value add, simple deal. So we take that deal, and usually you'll get a deck. As an investor, you get a deck from the sponsor, and the deck will have, 75 slides of how awesome this deal is. Of those slides, I personally pay attention to just a handful. And one of the slides that I pay a lot of attention to is the pro forma, because that allows me to see just how conservatively or aggressively the deal is underwritten. It allows me to compare it to other deals that I've seen in that same market. My huge time suck was this. I would take those pro forma numbers, and when I first started 5 years ago, I would actually re-underwrite the deal myself. And the reason I would do that is because first, it taught me a lot, but then secondarily, it allows me to just have a better understanding of what makes a deal go up and what makes other deals less successful. That was a sizable time commitment. Taking those numbers, I'm at the point now where I can look at the numbers and say, okay, well, this is going to be a highly sensitive deal to, let's say, exit cap rate, or this deal is going to be highly sensitive to rent growth. In the beginning, it took me hundreds of decks and hundreds of those exercises to get to that level. So what large language models allow me to do is screenshot that, upload it, and say, run it. It's not at the point yet where you can screenshot a pro forma, upload it to an AI, and say, stress test it. But we're pretty darn close. And what AI can do today is, with a detailed enough pro forma, and we're not talking an Excel spreadsheet, we're talking a PDF pro forma in the deck that you can screenshot. AI is at the point where, with a few simple prompts, it can tell you what the break-even cap rate on exit is, for example. So let's take that same multifamily deal, right, in Dallas, Texas. Let's say it's underwritten for 5% exit cap. You can upload that pro forma and say, at what exit cap rate will this deal lose money to me if I am the equity investor? And it will give you a range, and that range, is going to be 50 basis points, but it's close enough, and it's accurate enough.
There's a ton of value there and a lot to unpack. Exit cap is one assumption, but it's based on a presumed net operating income as well, right? So can you run multi-factor inputs that the sponsor has used? Let's say rent growth only grows at 2% instead of 4% in their pro forma, and NOI is X instead of Y, and the exit cap has expanded beyond their assumptions. Are those all things you can do? And where do you go to find the prompts for such a thing?
So all of those things you can do. I would highly suggest that all of those things are done consecutively. To back up a little bit, large language models think very linearly. You say one thing, it does it. You say another thing, it does it. And when you write prompts, those prompts need to be fairly linear, because the model will go back to its previous answers and synthesize that data and, come up with a subsequent answer, right? So all of those things are more than possible if you have the Excel model. If you don't have the Excel model, you can still get a lot of things done from the PDF. But again, it needs to be a fairly detailed PDF for the accuracy. What I will tell you is this: what I've been doing and what I've trained AI to do, and I write about it, and anybody who would like to get those prompts, if they subscribe to my newsletter, the welcome email has those 5 prompts. I think that's such a huge value add to LP investors. Once you structure those prompts and once you prompt your model to ask those things, what happens is it can answer those questions. The answers that it cannot give you, it will tell you, I can't answer this because such and such assumption is not given to me. Or it will say, well, exit cap rate is not explicitly stated in the deck, but I can back into it because I know the NOI in year 5 when the deal is sold, and I know the sale price. So let's back into it and, calculate. And, the exit cap is roughly 5.25. And you can then prompt and say, okay, well, what happens if the exit cap is 6% or 6.5%? Can you stress test it? Oftentimes it can.
There's just so much there that I've been taking some notes here, like, I got to ask this, I got to ask this. So this will probably send everything in chaos, because we do have a few notes on questions we want to ask, but this is just so interesting to me. So if you're a computer programmer, which I am not, you hear always garbage in, garbage out, right? So you're putting in a pro forma, which is just a guess, an educated guess, hopefully, of what the operator thinks will happen. So at Passive Pockets, we have a deal analyzer, right, where you can go into old-fashioned Excel and put in the data, right, from the pro forma, and then it will kind of turn red or green based on whether the value fits in the range. So for like cap rate, right, you put in a 4 cap rate and it says, okay, typically cap rates are between 3 and 7 or whatever. So if it's green, you're like, okay, that's probably in the range. If it's red, it's out of the range. So how does the AI, the large language model, figure out, well, one, is the data that we're looking at even realistic? Does it make sense? And then also, how does it then analyze, like, yes, these numbers are in range or not? Does that make sense what I'm trying to ask?
Makes perfect sense. And yes, garbage in, garbage out. And yes, you have to prompt the model to go and look at historical numbers or to go and pull certain reports. Here's the shortcut that I personally use, because again, the problem with most large language models is A, you don't know where it's getting the data from that it's telling you, and B, you may not agree with those sources of data. We are at the point where if you upload a deck with no other sources to Notebook LM and say, give the 5 prompts and say, run it. One of the prompts is, tell me how this compares to the historical averages. Tell me how this compares. You can prompt it to tell you how this looks in the range of possibilities. It's not going to be super accurate, but 95 times out of 100, it will flag things that are not like super conservative consistently.
What are we flagging here? Can you give a specific example? Are we talking about, hey, rents in Charlotte historically have gone up 2% a year, and this one says 4%, and it gets that background information not from the operator, but just from, it goes into some database that talks about Charlotte rents, and it pulls that out of some government or market database. Is that what we're talking about?
Bingo. That's exactly what we're talking about. So it will flag expense versus rent growth, for example. It'll say something that, well, one of the things I don't like about this deal is rent is growing at 4%, expenses are growing at 2% in the pro forma. Or it will say things like, this exit cap is, say 5.25, right? But I would stress test it to a higher number. Or it will say things like, well, vacancy, I've been testing this a lot for industrial deals recently. And industrial, just for background for LPs who may not be familiar with that, industrial deals are a little bit different, right? Because most of those leases are structured as triple net leases, so there's a lot less moving stuff that can affect the deal. But the one thing that can make or break the deal is leasing velocity, how fast the property is going to be leased up, and the vacancy in between those leases. And I've been testing a lot of industrial deals recently. It will say immediately like, oh, this deal's underwritten for 9-month vacancy. I think that's aggressive without prompting, without me adding any additional context. So that's level 101. Level 101 is you take your deck, you upload it to an LLM, and you say, run with it. You give it the 5 prompts and you say, tell me what you think about this deck. Level 102 is you go to an LLM, and the best one for this purpose is Notebook LM because you can constrain the sources. You can say, only look at the deck and only look at these 3 sources I'm going to give you. And for those 3 sources, you can do a little bit of legwork on the background. You can find some reports. You maybe have a CoStar report. Maybe you can find some broker reports from the area. You can upload those reports and say, only use this data and now look at this deal and see how it compares. That's a little bit more work on your end as an investor, but it effectively compares what you're seeing in the deck against what the market is. And you can set those parameters.
Leyla, for me personally, I'm stuck in my ways, as I mentioned before, and I've got my process. And I feel like sometimes, even though there might be a better solution, it's going to take me a long time to figure out how to implement it and figure it out. Is that fair, or is this that easy? Is it an easy button that I can push that says, okay, today I can go into AI? And if I did that, you mentioned Notebook LM, you mentioned Claude and Chat GPT. What are kind of the advantages of one versus the other? Is there one that maybe you start with as a beginner and you graduate to as you get more comfortable with the technology?
All right. So for people who have absolutely no idea about what we're talking about, who have very limited experience beyond, asking questions to Chat GPT, here's what I would do. I would go to Notebook LM and I would create an account. You can sign in with your Google account. It's free. Okay. All of the models I've tested. Paid versions, I've tested. Free versions. If you're just starting out, go to Notebook LM, register an account, open the first notebook, and upload a deck. Take the 5 prompts that you can get by subscribing to my newsletter. Take whatever prompts. You can write your own prompts. You can say, tell me about this deck. I'm an LP. Tell me what you think about this. Take those prompts, throw them in, and in 5 minutes, your mind is going to be blown. I can guarantee you. Prompt number 5 is, based on everything you've told me about this deal, what are the 5 questions I should ask the GP? What are the 5 good follow-up questions. You don't need to know anything about underwriting. You don't need to have any experience. 99.9 times out of 100, that prompt will generate better questions than I could. It's genuinely amazing.
And what you're uploading, the PPM, the operating agreement, the pitch deck, so those 3 documents is basically you just upload those and then you give it these prompts. And that's kind of step 1.
You don't even need to do the PPM. You don't need to do the operating agreement. Just upload the pitch deck and say, this is the deal. I'm the investor. Tell me about it.
So is the analysis of the PPM and the operating agreement, is that a separate discussion? Right now, we're just talking about the deal, the pro forma, all of that. We're not talking about waterfalls or anything. We're just talking about this deal. And then you do a separate inputs and prompts for how do you figure out the PPM? Because, one thing I'd like to do is just compare the PPM to the operating agreement, because often you're going to find discrepancies there.
This discussion is just the deal itself. We're not talking about the PPM. We're not talking about the operating agreement. That's a separate podcast that we need to record.
Okay. Well, we'll schedule that as soon as we're done here, because we're going to need that one too.
That's a whole other can of worms, and there are some caveats, and I can talk about that for 3 hours straight if you let me. So,
well, let's talk about your process, Leyla. You said you were getting 10 to 12 deals a week that you're evaluating. Typically a deal could take anywhere from 5 minutes when you realize that there's missing data, or it's a sloppy pro forma, or any host of other scenarios, or it could take all day if you really get into the weeds and read the PPM, the operating agreement. So let's assume that it's one of those deals where it's a little bit more intriguing on the front end and you want to do a deeper dive. How much time do you feel like AI is actually saving you? I guess we could talk about the filtering process too, but once you get into the weeds on the deal, how much time is it saving you overall?
So of the many deals I see, my funnel is wide. I look at this as a funnel. So I want to capture as many as possible. And there are many reasons. And for any LP who is just starting out, or experienced LPs, my one piece of advice is start to look at deals. You're not going to invest in all of them. Don't expect to invest in all of them, but start looking at deals, because that's the only thing that will allow you to spot the good deals from the bad ones, right? Or the deals that fit your criteria from the ones that don't. But for me, AI saves a lot of time, not so much on the deals that I really want to dig into. It saves me a lot of time on screening. And some of the deals, I'm at the point where I can open the deck and tell you in 2 minutes if I want to look deeper or not. The next level deal, I throw it into the LLM and I say, okay, well, here's the deal. Tell me this, this, and that about this deal. And let's see how sensitive it is. Is it? That step probably weeds out another 60 to 70% of stuff. And it saves a little bit of time. It doesn't save a whole lot. What it does give me, for my own self, what it tells me is it tells me the weak points in any given deal. There's no perfect deal, right? We all know this. All of our listeners know this. There's nothing perfect out there. It just doesn't exist. I'm looking for deals that have the widest margin of safety. Deals that have a lower probability of me losing my equity, because that's the one thing that I screen for. And this is where AI can help so tremendously. It highlights the weaker points in the deal, and it kind of focuses my attention on what I really need to pay attention to and the questions to ask.
You've already kind of done this, but I really want to just kind of start over almost. And if you can walk us through the process, because I'm getting, when we did the deal analyzer, a few years ago, it wasn't meant to say, yes, this is a good deal, and no, that's a bad deal. It was meant to generate questions for the operator and also just kind of show us where things were maybe off of what standard or market is. So also, Paul and I have started a podcast series where we call it Dig In and Delete, right? Where we just go through our email inboxes and we look at something for 3 minutes and we say, are we going to take this to the next step? Or are we just going to delete this email and not look at it anymore? And it sounds like you have the kind of process where, okay, you screen deals somehow quickly, and then you take it a next step and dive deeper, maybe put it in the AI, and then maybe you make your investment decision. So can you walk us through, if you have 15 deals in a week, do you use AI on every one of them? Or like you said, you can throw out a couple just by looking at them for 2 minutes. How does that go? And what's the end goal? Are you looking for, does AI say, yes, invest in this deal? Or does it say, yes, this fits the buy box that maybe you've constructed for it? Does that make sense what I'm asking? Because I want to kind of understand at a deeper level the process here.
Big overarching statement. None of this is financial advice. Please don't take AI's word for gospel, okay? I'm just going to put this out there. We should have opened with that. And this is a disclaimer. Please do not. Do your own due diligence. AI is a tool. It's not a thing that's going to tell you, great deal, go ahead. And I don't train my own personal bot to do that. I don't want it to tell me. I want to make my own decision. I want AI to tell me, here, this is a little bit out of the norm. This is a little bit aggressive. This is something that can make or break this deal for you. And this is how much margin you have. So, for example, let's go back to the industrial deals. This deal is in XYZ town. The deck says it's very conservative. I disagree. So AI will tell you that, and AI will tell you, and here's why I disagree. You can train AI, or you can prompt it to tell you that. And then it's important to understand, what is it that's triggering my bot to tell me that, hey, I don't like this? What is it? What are those things? And what do I need to ask from the GP? For myself, I'm at the point where I can screen my deals myself all day. The reason why I'm spending so much time on this is because a lot of people, I want to transpose this knowledge at scale. My inbox is full of deals, and my inbox is full of LP emails who are emailing me and saying, hey, have you seen this? And I want to take that knowledge that I have developed, and I want to systematize it and share it at scale. And I've been raking my brain on how to do that for a year. I've been testing AI since day one, since the day it came out, and it wasn't good. It's in the last 3 months that when Notebook LM came out and became widely available, that it's finally started outputting stuff that's usable. So the process, to get back to your original question, is we take the deals, we look at them. For somebody who's just starting out, they don't have the knowledge to look at a deal in 3 minutes and throw it in and trash it. They probably need some time. And it's a good learning exercise. It's a great learning curve. Take those deals, put them into the LLM, and see what it says. And try to figure out you can ask. The best part about AI is that if you don't understand something, if you don't understand how it came up to that conclusion, you can just simply say, explain this to me, and show me the backup data, and show me why this matters.
My wheels are turning for sure on just potential use cases for this beyond just the underwriting. One of the things that I really get frustrated with is reporting on the back end on deals that I am invested in. And I think it would be a great sort of use case potential where you could upload a pro forma and then continuously upload rent rolls and P&Ls that you get, if you get them, if you ask for them, if you have to ask for them. You can throw them in there and you can see how the project is progressing towards that pro forma, and if there's shortfalls, where they might be. And those are questions you can certainly ask the sponsor as the deal matures and keeps rolling. But another thing is, I'm curious on your bot. Do you have a name for your bot, by the way?
Mini Leyla.
Mini Leyla. Okay, I love it.
It's my baby.
That's fantastic. Do you ever use Mini Leyla to do any background checks or vetting of the sponsor themselves? You talked a lot about downside protection, what could go wrong with the deal, wanting to avoid those pitfalls. A lot of times it's not even in the deal itself, it's in the sponsorship group and who's running the show. Are you able to use AI or leverage it to evaluate the track record of those sponsors?
I'll tell you a funny story. I was speaking with somebody about this particular topic, and this person mentioned that, hey, I once asked AI to go and do a background check on the people who organized a certain conference. And that kind of turned a light bulb in my head. So I went to LinkedIn and I downloaded the list of all of my contacts. I have several thousand contacts. And I said, okay, well, let's see if I should be deleting some of those contacts, right? Do I want to be associated with certain people? Because I have no idea, right? After 200, you have no idea who's in your contact list, right? So just as a thought exercise, and I uploaded that list, and I said, okay, well, this is the list of names, let's say, 4,000 names. Give me the list of people who may have a background that, I don't know, maybe they're convicted criminals, right? Whatever, felons. So I uploaded the list. It took forever to prompt this, forever and ever. It was basically meaningless. It doesn't do a thorough job. What it does, and it's hard to prompt it, but it can take the names and run the background, just a background search. That is such a meaningless thing because what we're screening for, we're not screening for everything. We're screening for certain data, right? I just don't want somebody who is being prosecuted for fraud to maybe have access to what I'm writing, right? Or whatever, right? It just doesn't, can't think that deeply yet, but one day maybe it will.
I'm still on the deals. I have so many questions. Can it go back and validate like past deals? Can you put in a deal from 2022 that, had capital calls and lost all the equity and got sold? Like, can it show you mistakes that you've made, right? Because if we're just looking at the pro forma, and I get it, it's picking out flaws maybe in the pro forma, but I also want to analyze my past mistakes and make sure I don't make those again. And, I guess it would just be spitting out, bridge debt for half the stuff. But have you done that with some of your past deals that have gone full cycle?
What I have done is I've done what Paul has suggested. I've uploaded financial reports from deals and said, what's going wrong with this deal? Why is this deal not performing? Analyze this and do this. I don't know how meaningful that would be, but it's a good exercise. I'll try. I'll report back. So we would need the original deck from when the deal was first syndicated. We would need some financial reports, interim. They don't need to be quarterly. They can be like, if the deal was alive for 5 years, right, we can upload once a year. And we would need to upload data on sale price, NOI, exit, that kind of thing.
The key would be the prompts, right? You'd have to ask it the right questions. And I think that's the challenge for people new to AI. Like, I'd just be saying, hey, what happened here? Right? And it's probably need to be a little bit more specific than that. So is that what you build out? You have Mini Leyla. So are there different versions of Mini Leyla, or is it just one and you just dump everything in there and it learns and gets better as you go?
I call her Mini Leyla because it's notebook LM and it retains some knowledge. It really isn't very good yet. ChatGPT is a lot better at this. ChatGPT will retain knowledge from your prior conversations. Notebook LM does not. So I call my Notebook LM Mini Leyla. My workflow is this. I save all the prompts. I write good prompts. When I finally get the prompt that works, that spits out consistently good information, I save that prompt in a safe spot, in a separate document, label it, and I use it all the time. Here's a hack that a lot of people are going to love. You can help yourself by asking another LLM to write prompts for you. You can go to ChatGPT and say, I'm asking this, what's the best prompt to do it? Sometimes it will give you a prompt and sometimes it's okay. And then you take that prompt and you take it to Claude and say, okay, here's the prompt, do this. Kind of works, kind of doesn't. We're so early in the game. It's going to get better about recognizing what it is that you want, but you have to think like a robot.
Jim is a machine, so that won't be hard for him, but it will be hard for me.
If prompts are the key, right, because you see different groups building their own AI machine that they are allowing their members to use to analyze deals, right? And we're talking about doing the same thing here at Passive Pockets. But if the prompts are the key, really that's what you need to provide, right? So you've given us some great stuff already. Here's the model to use. Here's 5 starting prompts to use. But is that the key? Like, there isn't something where we can make a tool and just give it to everybody and say, here's the tool. It's got to be, here's the AI machine we recommend, and here's some prompts that'll get you really good stuff if you put in these 2 or 3 things. Is that how you build one of these tools?
So I have a tool that's a tool in the sense that you're describing it. With ChatGPT, you can build, custom GPTs that only do one thing. Essentially, you write the prompts in the background and tell the tool to only use those prompts. It's kind of hard-coded into the actual GPT. That's easy. It takes half an hour to build that. It's a useful tool, but it's ChatGPT. Notebook LM doesn't have that just quite yet. I'm sure that's coming. Things are moving so fast. 6 months from now, we could be having a totally different conversation. And that's why I think you have to kind of grab it and go with it while you can, because right now you have to be a little bit crafty with those prompts. A year from now, you're not going to have to be. It's going to get as intelligence. Those models learn on their own learnings, right? I don't think it's going to be like this guarded secret anytime in the future.
Definitely not a linear progression of this technology at all. It's exponential as far as how fast things are moving and how fast things are compounding on one another. Not to shift the direction of the conversation too much, but I think there's a lot of use cases for AI for operators as well, whether that be tenant screening, staying on track with a regular maintenance schedule, operations, whatever it might be. Is your expectation with people that you're partnering with that they should be using AI as well? Or is it still sort of early adopters and that's not really factoring into your decision making at all?
I think everybody's going to be using AI. I think it's kind of going to be table stakes for people to use it. I think groups that don't use it are just going to kind of go by the wayside. That said, what makes a good deal is not the technicality, it's the operational experience of the people who run it. You cannot outsource it. You cannot have AI do it. And this is a good caveat for investors. What we're talking about today is the mechanics. I'm looking at the mechanics, right? To give you an analogy, I'm kind of looking under the hood on how the pieces are connected, how big the engine is, how many cylinders it is, yada, yada. The driver of the car, we're not talking about this at all. And the driver of that vehicle is the most important person, is the most important key. And AI can do something, but it's up to you. The burden is on the LP to evaluate the operator. And that is the overarchingly biggest thing here.
And when you're talking about the operators, right, and this maybe shows you how my mind thinks, it's a little bit devious, but can the general partners then use the prompts that you're sharing with us or the ones I come up with and reverse engineer their pitch decks so that everything comes out looking rosy and I throw it in and, the mini Leyla says, oh my gosh, this is the deal of a lifetime and clicks every box. I mean, is there any danger there?
All right. So as somebody who knows how financial modeling works a little bit, I will tell you this. If the operator makes mini Leyla happy, the operator is not going to make a whole lot of money and he's not going to find a lot of deals that pencil to make mini Leyla happy because mini Leyla is going to say there's not so many levers to pull, right? You can pull rent growth. That's lever number one. You can pull another lever. That's a big one. Exit cap rate. With triple net lease deals, this is the only two things you can really play with. Vacancies some, but those are the two things. With multifamily, student housing, mobile home parks, there's a third lever, which is expense growth. That's it. And Mini Leyla is intelligent enough at this point where she can say, well, rent growth's looking great, but this group is projecting a 250 basis point cap rate compression. What's up with that?
I know we got to get close to closing. Paul, I have one more question. And then if you have another one, of course, we'll allow that as well. There's just so much here. I haven't even gotten off like the first paragraph of the notes that I prepared for this because this is fascinating to me. How do you use Mini Leyla for a fund, right? Because a lot of operators now are using funds and you don't get to analyze the deal. And maybe you analyze some of the deals once they're in the funds, but how do you deal with funds?
So personally, I do not invest in blind funds. Not to say that it's a bad thing, right? There are plenty of excellent groups who do funds and kill with them consistently. If you're comfortable enough to give your money into a blind fund, you need to be very comfortable with the operator, right? And then Mini Leyla is unnecessary. If you have a high degree of confidence in the operator, they will do the right thing, right? If they've done it 10 times previously, the likelihood is high. What I can tell you is this. If it's a fund with, let's say, 2-3 seeded assets, that's a gold mine for Mini Leyla because you can take the offering memo on those deals or, investor committee notes on those deals. And ideally, you have a couple of quarters of data on how those deals are performing. So you can take the quarterly data on the performance of those, let's say, 2 deals, feed it into an AI tool and say, well, how close are we? Is this tracking? Is there something that's going off? That's a great tool. That will save a lot of time.
Well, this has been a fascinating conversation and I appreciate you coming on, Leyla. I guess my only question would just be an example. Like, do you have a circumstance where you were evaluating a deal you're interested in and then you just saw a glaring red flag because of what AI spat out to you?
I will give you an example. It was the glaring red flag, but it was a flag that kind of blew my socks off. It was a retail deal, strip mall, right? In a good location, like from a great sponsor. It was a kind of a short pitch deck, great pro forma. On the surface, everything's looking good. I take that and I fed it into an LLM and I said, well, highlight the 5 things that I should be asking about? What are the things here? And this LLM looks at this deck and in 30 seconds spits out the questions. And one of the question number one is this: how is the sponsor going to mitigate the fact that this particular strip center is a 2-story strip center, and the retail on the top floor, those tenants on the top floor are going to be, it's harder to lease, rents are usually lower, yada, yada. I was so taken aback. I went into the deck and combed through it. There was nothing in the deck that mentioned this as a risk factor. It took it from a picture, like it analyzed the picture of the strip mall and said, this is a risk.
That's impressive. So again, we're definitely going to have you on, Leyla, to talk about the PPM and other stuff, because I think, like I said, I got a lot more questions. But how can people connect with you? And as important, how can they get signed up for your newsletter?
Thank you for having me, first of all, and best of luck to everybody out there. This tool is going to make investing a lot easier for LPs. I really believe that. So for people who are interested to learn more, I write publicly on accreditedinsight.com. It's a newsletter. They can find me on social media. I'm active on LinkedIn and X, formerly known as Twitter. Again, for every subscriber to the newsletter, everybody who subscribes will get a welcome email with the 5 prompts that will get you started. So please reach out. And if you have any questions or any suggestions on what else I can test, I'm happy to do it.
Awesome. Well, thank you so much, Leyla. This was fascinating, and we can't wait to do it again.
Thank you both.
That wraps up today's episode of Passive Pockets. Huge thanks to Leyla Kunimoto for sharing her insights into how AI is transforming the way LPs approach investing. You can find out more about Leyla's approach to investing with AI by going to her website, accreditedinsight.com.
If you found this episode helpful, be sure to like, subscribe, and leave a comment. For more tools and education to support your investing journey, visit passivepockets.com and check out our free 7-day trial. Thanks for tuning in, and as always, happy investing.